Great report from Elise there, and really it's interesting to watch the market at the moment, the market dynamics. And let's get right amongst it. We've got CommSec's chief economist and one of our regulars on the show, and one I get most excited about because I love having a chat. We'd have a whole half an hour with Craig if I had my time, but it's Craig James. Welcome, Craig.
Thank you very much.
Now, Craig, everybody is wanting to know what is happening, as always, so let's start as we usually do with the global scene, then we'll move to the national scene and then down to South Australia.
Well, if we look globally, things look as though they're improving. And the Reserve Bank Governor said it this week as well. He said, well, it looks as though that there's a bit of a stabilisation happening. So Greece has got its money. It's got the payout, so it's got the bailout money. They've tried to, financial markets have tried to turn their attention to Spain and what's happening there. Fortunately, the Spanish government said, yeah, budget deficit's a little bit higher than normal, but we'll get it under control. So there's no major disaster stories coming out from Europe. Then you go over to the United States and their economy continues to pick up in terms of housing starts, in terms of employment. Very, very good news. China's the one that's been sort of a few more question marks. They're a major trading partner, major driver of the global economy. They put petrol prices up or fuel prices up, and there's concerns about what that means for the growth rate. So overall the global situation's looking pretty reasonable. Here in Australia, things are very, very quiet. No major disasters, but no major good news either. And we haven't had a lot of economic data of late. Any of the economic data has been a little bit on the soft side. We had consumer sentiment. That shows that people aren't, shouting from the rooftops that things are good. Gen Y are happy. I don't know why they're so happy about life, but so the rest of the demographic.
They've never seen it hard though, Craig.
That may be the case. Yeah. That may be the case, but they're happy about life, and the rest of us are still very, very, very cautious. But more settled conditions happening in terms of the share market. Seems more settled things happening in terms of the economy more generally. And Adelaide, well, basically this is where it's all at, isn't it? You've got all your festivals. You've had the motor racing. You've had the Australian swimming championships. And hopefully that's put a lot more spotlight in terms of Adelaide and getting things going. Unfortunately, electricity prices here in South Australia are somewhat high, according to the newspapers. I haven't done the research myself, but that's something you've got to focus on. People looking at costs at the moment, and if they're concerned about their costs going up, again they start to get a bit cautious about investing, spending, employing, whatever it happens to be.
Now, Craig, Adelaide basically is in the process of reinventing itself with the Torrens precinct, with the new Oval, with the new Royal Adelaide Hospital, with the Southern Expressway, with the Bowden development and so on. There are more cranes in the air at the moment than we've seen for a while. Do you notice that? Does anyone ever talk about that in your circles?
Certainly it is much more on the radar screen now. So it is places like Darwin with the LNG project. It's places like Adelaide and South Australia more generally in terms of what's going on in terms of the infrastructure type developments, and also the uncertainty about BHP Billiton in terms of Olympic Dam. So that's creating a lot more focus and saying these could be the areas that really start to take off, and it's all about momentum. Darwin certainly has got momentum with the LNG deal set up there, and certainly sort of South Australia, as you say, more cranes that you see, more activity around the place. The activity on Rundle Mall as well. You go up there and you can see some construction. What I'd like to see is some of the properties on King William Street occupied a little bit more than what they are. So a little bit more vibrancy. Particularly in King William Street, wouldn't go astray.
Now, we talk about the two-speed economy all the time. Mining, obviously, sitting in our backyard, is talked about a lot in South Australia. Your take on it as a person outside of the state looking in?
Yeah, well, certainly, sort of the mining will continue to be the focus for quite some time to come. China's still in the early days of industrialisation, and it's not just China, it's India and it's the Asian economies more generally, Asians with higher income levels, and we've got to be looking at the opportunities that are expressed by that as well. China in terms of tourism. We're seeing a lot over the eastern states of advertising at the moment for Adelaide and South Australia more generally, particularly in terms of Kangaroo Island. So Yeah, that's getting a little bit more focus when you have that on the swimming. Certainly, so that's the advertisement which is occurring. It is all about top of mind, and if you can get yourself top of mind, certainly you start to get that momentum moving through.
So the profile is obviously important, part of the process. Now, 2011 saw us pretty much in election mode the whole year. So we've got a government just playing with all sorts of things. The mining tax got through the Parliament, what impact will all of this have, and do you think the politicians will be able to get their act together federally? Locally, they seem to be okay. And what's the impact of that on property?
It is the uncertainty. So we've got a carbon tax coming in. We've got a mining tax coming in. For a lot of people, they're saying, oh, there's new taxes coming in. I've got to be a little bit cautious about, what I do. So that may dominate activity, up until the implementation. I think what we've got to see the politicians is coming out much more in terms of the positives and saying, in terms of the carbon tax, a lot of people are going to be better off rather than worse off. In terms of the mining tax, it's not a broad tax in terms of the whole mining industry. It's focused very much in terms of coal and iron ore. So I think what we do need to see is more messages from the government about what the true state of it, and to stop people sitting on their hands. The Reserve Bank is constantly out there telling people to focus on the opportunities rather than focus on the difficulties. But I think too, in terms of the carbon tax and the mining tax, it's a couple of months after implementation, people are going to look at it and say, weren't we supposed to have a new tax? Oh, no, it's already in. Oh, I didn't see any impact. So.
Yep. Well, Craig, this morning I spoke at a breakfast about property, surprise, surprise, said that you're coming on the show, and everybody wanted to know about this bubble burst of property that's been talked about so much in the States in particular about Australia and the impact of the high Australian dollar on property. Now, you've already answered this once, but let's have a rerun on that and give me your take on whether we've got a bubble that will burst in Australia and also in South Australia.
There's no bubble. There's no bubble. I mean, if there was a lot of supply out there, if there were investors, speculative activity in terms of the market, then you'd start to be worried. You'd be worried about a US type situation. We've got strong demand for property, and supply basically isn't keeping up. And I think if anything, we're going to see prices rise over the remainder of the year rather than fall. We've got a tight job market. We haven't got a degree of oversupply. And if you look at housing affordability, from the experts, RP Data and RISMark, they've looked at housing affordability. Housing affordability has basically gone sideways over the last 7 or 8 years. If anything, we're probably at
improved.
Best levels of affordability since 2004. So I think people need to do their homework. You get the media reports and say that there's a bubble and whatnot. Get down, do the research. The research basically says, look at incomes right the way across Australia, compare that with house prices right the way across Australia. You do the affordability correctly and we haven't got a problem.
When does the market bottom out? Here's your crystal ball. Let's go on record. We need a TOOP exclusive.
I think the exclusive is things are bottoming out as we speak. We do have a situation where we're getting a little bit more investor interest in terms of the market. I think we'll start to see their owner-occupiers move. We've got stability in terms of interest rates. We've got a little bit more stability coming through, in terms of the global situation. Here domestically, we just need to get a little bit more confidence. And I think if we start to get the investors coming into the market, they are recognising the opportunities, then we're going to see the owner-occupiers, come in after that. So I would say we've got the demand there. We've got migration levels lifting. We've got a job market which is still pretty healthy, but we haven't got a lot of supply coming on the market. And I think the only thing works in economics, demand and supply equaling price. If you've got more demand relative to supply, price has got to go up.
And Craig, at the moment we're finding there is absolutely, completely concur with all of that. There is hardly any surplus stock out there at all, and the demand is very high but very discerning. All you need to have is a trigger to go from discerning to oops, we've missed the bottom, and away she goes. Would you agree with that?
Well, that's right. And if the Reserve Bank did surprise in the next couple of months and came out with a rate cut, We are still forecasting for the Reserve Bank to cut interest rates in May. If that came to fruition, of course everyone would get into the markets, but of course the people that have moved 1 or 2 months before that, secured their property, particularly investors, got their tenants in that, they'd be just sitting back and they're saying, well, you were a little bit too late on this.
Now, Craig, quick one. Invest Flurio, we've got, you heard me talk about right at the start of the show, where we've said to the Flurio people, the market's so quiet down here, this can't last, like it's dead. And what we're saying is, for those who want to sell, let's make that market and stimulate it. Would you agree, well, what are your thoughts about a blue chip holiday destination like 1 hour from the CBD? Doesn't have to be a no-brainer in terms of buying while it's low?
Well, certainly you've got the right conditions. You've got the conditions at the moment where things aren't running away. That's the worst time, so when you're chasing prices up. I think it's also, I look for some sort of special supply characteristics, some sort of exclusivity, because if it was just general sort of stock around the market, then you'd say, well, it doesn't really matter. But if it's blue chip, sort of a type investment, there's not too many that could be replicated, and you've got demand there. I would have thought that was pretty much a no-brainer.
Craig, that's been great. We'll be back in a sec with another couple of questions.
Okay.
Now let's go to going, gone.